Morning, Steve Free in Chicago with the morning grain comments. Mixed trade overnight. We've got beans up about 7 cents, wheat down anywhere from 3 to 4 cents, and corn about unchanged. Outside market's pretty quiet. A little bit of pickup in overnight volume in the beans. It happened at about 3:30 in the morning, and kind of came from Europe. Yesterday we heard some rumors in the beans that there might be some European pricing of meal prior to the USDA report on Monday. The bean market has a lot of people frustrated right now. They're seeing mixed news coming in. Obviously, we don't know what the government's going to say as far as stocks on Monday, and that could have a big impact on old crop soybean prices. But we are seeing, on one hand, a big drop in South American premiums as farmers sell beans, and it looks like they've got a little bit more beans than what the demand needs. And so we're seeing basis break pretty hard, and normally that would be negative to our futures. On the other hand, obviously we have the USDA report, and we're seeing, especially in the East, crushers bidding up for beans to try to get some ownership before either the report or before the spring and summer planting season. So mixed news there, but if you are getting a feeling from just an overall global standpoint, the bean market feels a little heavy right now, and we'll see what the government says on Monday. Over the corn, I think the market is long, and it's waiting for the USDA numbers. I think the market has been pushed higher on three reasons. The number one reason was the December 1 stocks lower than expected. Number two, increase in demand, and then number three, what's going on with the uncertainty in the Ukraine. I think the corn market is sitting at a pretty important price level, and whatever the government says as far as stocks and acres will dictate the next big move up or down. And then we're just going to have to see how many acres the farmers plant and what kind of spring weather we're going to have. It still looks like the month of April is going to be cooler than normal, and especially in the northern U.S. corn belt, that could slow plantings there. The wheat market is dealing with a couple of issues. I think the top issue was yesterday we saw some rains move across the southern areas. There isn't really necessarily a change in the weather pattern, but over the next 30 days we might see chances for fronts to move across. The amounts in coverage may be lighter than normal, but they could be more frequent. It seems like there could be some Gulf moisture air pushing up into the eastern part of the southern plains, but the lack of humidity and the lack of a power to make that rain widespread could limit the amounts in coverage. So it looks like hard red, winter wheat areas, from a moisture standpoint, could get a little bit better than what they have been of late. So that could offer some resistance to the wheat market. The other thing is talk yesterday that one U.S. buyer of hard red winter wheat, Ricardo, may have sold it back to the United States and replaced it with cheaper Russian wheat. So, I mean, if the Ukraine situation doesn't get any worse, European and Russian wheat is cheaper than the U.S. We also noted yesterday that Canada is trying to improve their logistics. If so, that could move more grain into the United States and offer resistance not only to the wheat market, but could bring some rapeseed down, which could offer some resistance to the meal market, and could bring some oats down, which finally could put an end to some of these higher oat prices. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.